This is going to be a tutorial on how to complete the statement of cash flows. Let's first begin by talking about the purpose of this statement. The purpose of this statement is to show the flow of cash in and out of the company. As an investor, we would like to know how the company spent their cash and how the company received their cash. This is seen in the statement of cash flows. In order to complete the statement of cash flows, there's certain data that we need to obtain. We need to obtain data from the income statement and data from the balance sheet. From the income statement, we need to show the cash that came in that resulted in our net income, and we have to remove our depreciation expense. So the two pieces of information that we need from the income statement is net income and depreciation expense. From the balance sheet, we need to analyze the changes in assets, liabilities, and equity. Before we get started, I would like to give you a few tips. Number one, when you go to your balance sheet, cash is your answer. So we're not going to be analyzing this answer. In fact, this is where we need to end up when we're all said and done. So when you get your change in cash, you're going to take the difference between 2016 and 2015. That is going to be my answer. So when I'm done with my statement of cash flows, I should have a change of a negative $5,000. That will demonstrate that I have analyzed all of my cash transactions correctly. A second tip is that when we're analyzing items on the income statement and balance sheet, we're going to ignore the subtotals. Because we ignore the subtotals, I've highlighted those in red on the video. We're going to ignore those for purposes of analyzing our cash flow. The third tip is that when we analyze retained earnings, we need to calculate our dividends paid. So again, the three tips are: cash is the answer, so we're not going to do any analyzing of that. This is where we need to end up with our final cash flow statement. We're going to ignore all of the subtotals, and we need to calculate and find the dividends paid. When we are analyzing cash and we're looking at the impact to cash, when we take our differences, we're not looking at the difference in the account, we're looking at the impact to cash. So all of our assets other than cash, when they increase, our cash decreases. The opposite is also true. For all of our other assets other than cash, when those decrease, our cash increases. So take, for example, accounts receivable. Whenever we receive money from accounts receivable, my accounts receivable account decreases, but my cash account increases. So when we're doing our statement of cash flows and analyzing the account, we're not looking at the impact to the account, we're looking at the impact to cash. Our liabilities and equity, when those accounts increase, my cash account increases. When my liability and equity account decreases, my cash account decreases. So keep that in mind when we're analyzing our accounts. Our statement of cash flow is going to have three sections. It's going to have an operating section, an investing section, and a financing section. The operating section is going to include net income and depreciation expense and my changes in current assets and current liabilities. My investing section is going to have the changes to my long-term assets, and my financing section is going to have my changes to my long-term liabilities and my equity accounts. To begin our statement of cash flows, we're going to start with the net income from the income statement and add back depreciation expense. The reason that we add back depreciation expense, if you think about in accounting one at the beginning, when we learned our adjusting entries, remember when we record depreciation expense, that does not have any cash impact. It reduces net income, but it has no impact on cash. So we have to add that back to my net income to convert my net income number to a cash basis number. So we start with net income of $32,000 and we add back our depreciation expense. The next items are going to come from the analysis of the balance sheet. So step number one, we're going to take the difference between 2016 and 2015. So for instance, for accounts receivable, we went from $64,000 in 2015 to $76,000 in 2016. So I have a $12,000 increase from 15 to 16. Note my inventory. My inventory went down. I had 81,000 in inventory in 2015, 68,000. So in essence, you're going to take the 2016 number and subtract from that the 2015 number and get all of your differences. So that's step number one. After you get all of your differences, now you're going to do the impact to cash. So again, looking at our chart, accounts receivable is a current asset. My current asset increased. So if my current asset increased, that means my cash is going to decrease. So that's a $12,000 decrease to cash. Note that my inventory is an asset. That decreased when my inventory asset item decreases, right here. My cash account increases. So I have an increase to cash of $13,000. So I'm going to analyze all of my assets and my liabilities using the chart above. So let's take a look at a liability. Note that my accounts payable account, that increased $6,000, so my cash increased $6,000. My accrued liabilities increased $5,000, so my cash increased $5,000. So what I'm doing here in this section is I'm just taking the difference between the 2 years, the difference between 16 and 15, then I'm looking at the impact to cash. Remember, I am ignoring all of my subtotals. And then when I get down to retained earnings, this is the point where I have to calculate my dividends. So note that I have a difference of $26,000. That difference includes net income as well as dividends paid. So I've already have net income accounted for. So what I need to do is I start with my beginning balance, which is my 2015 number of 197. I add to that net income of 32,000. I subtract my ending of 223,000. That gives me dividends paid of 6,000. So I'm paying out dividends. So my cash is decreasing by 6,000 because I'm paying out 6,000 in cash. So that's probably the most complicated piece of trying to figure out the analysis of the accounts that are going on to the statement of cash flows. Now that I have all of my differences and I've calculated my dividends, now I'm going to decide which section of the cash flow statement these items belong on. Remember, my income and my expense, anything on the income statement goes on the operating section, as well as my current assets and my current liabilities. So my accounts receivable, inventory, prepaid rent all go under operating. I've already accounted for this $64,000. That's my depreciation expense. So I'm not going to account for that again. I accounted for that. I picked that up from my income statement. So ignore this one. Then my other liabilities, current liabilities, are all under operating. Then under investing are going to be my long-term assets. So my land and my plant and equipment go under the investing section. And then my equity is going to be my long-term note payable. There was no change here, but that if there were a change, that would be under financing. My common stock change would be under financing. And then my dividends paid is going to be under financing. So to do a statement of cash flows in good form, you put the company name, the statement of cash flows, the title of the statement, and for the year ended. Then we're going to do cash flows from operating activities. We start with the net income from the income statement and the depreciation expense. Then all of my current assets and my current liabilities are going to be listed here. And I'm going to take all of the cash flows from operating activities, and that is going to give me my net cash provided by operating activities. So in this case, I'm going to take the $32,000 of net income, the $64,000 of depreciation expense. Then I'm going to take all of my operating expenses listed above and all of the impacts to cash and list those next. So that gives me a total of $111,000 increase from net cash provided by operating activities. Then I'm going to do my investing activities. I have 2 land and plant assets. So note here, my land and plant assets, my differences here. I'm going to list those next. Those go under the investing section. That gives me $195,000 spent on long-term assets. And then I have my issuance of stock, which is the $85,000. And then remember, don't forget, you must calculate your dividends here. So that's going to be a negative $6,000. That gives me $79,000. So when I add the $111,000 minus the $195 plus the $79, that gives me my decrease in cash of $5,000. It gives me my answer. So to double check, I have to make sure that I get my answer of $5,000. Then if I wanted to get my final balance, I could add the beginning balance. So my beginning balance in cash was $32,000. So 32 minus the 5 gives me my $27,000 balance in cash. So you can see that I ended up with my overall cash balance of $27,000.